Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well. Good morning, good morning. How are we, folks? Good to see you. Welcome to Wealth Coffee Chat. Good to see you on this morning. Jeff, mate, howdy. Hope you're well, buddy. Hope you're well. Bradley, good to see you. Alex is there too. Kevin in the house. Good to see you, mate, all the way from Florida. Hope you're well, folks. Facebook user, whoever you are, wherever you're coming in from, good morning. Great to see you. Do the old bibs and bobs while we get things warmed up. Jason Witt's my name already. Most of you know that, but if you're brand new, like I say often, welcome. Thank you for joining, and let us know in the chat where you're coming in from. Good to have a newbie here. If that's you, welcome along. What do? We do this each day, 10 past 8. We try and, dig into some information, some facts, some fears, some pontifications about the idea of property investing and going the distance, folks. So welcome along. Hopefully that might be something interesting to you. So hang around. It's usually 15 to 20 minutes long. Sometimes I get a bit wound up and go a bit longer, but who knows? Morning, Justin. How are you, mate? Good to see you. Thanks for joining. This morning I thought we might talk about, some of the bigger picture about the idea of the types of property investing. And I think some of these actually aren't property investing. I'll talk about that in a minute. But often the idea property investing for me, folks, is a very simple one, right? Investing means you own something for an extended period of time. Now, there are many people that I meet who are in the world of sort of buy something for a bit and then sell it and turn it over and whatever. And I don't call that property investing, folks. I don't call that investing at all. I call that a business. And yeah, sure, you can invest in a business, but property investing, no. And I want to talk about that today. So that's the thought. That's the idea. So stick around. We're going to have a bit of a yarn, a bit of a coffee chat about the three types, the three ways property grows, big picture, and which one are you, folks? Which one are you? How do you roll? What's your approach to your property portfolio? Maybe I've done it. Maybe you use a combination. But good morning, Luke is there as well, mate. How are you? And Allison, great to see you, gang. All right, let's get into it. Let's have a bit of a chat about the idea we've got this morning, the idea that there is three ways our portfolio will grow, our properties will grow, maybe types of ways to make real estate, create wealth, create cash, put money in our pocket, create equity, whatever we want to call it. These are the ones that I see and have seen many, many times. Number one, what do you reckon it is, folks? Put it in the chat if you think you know what it is. The first one here, I think the simplest one, the simplest idea when it comes to property investing, property ownership, using property as a vehicle for wealth, simple. The idea that it is buy and hold. Folks, it's as old as it's as old as the conversation can be. The conversation is around the idea you purchase something good and you keep it for an extended period of time. What's the period of time, folks, that I'm talking about? I'm talking minimum 15 to 20 years. And, if you want your properties to get some momentum, the idea of owning them for an extended period of time, is super powerful, folks. Super powerful. Can you buy something and hold it for that period of time? Now, let's talk about the pros and cons of this one. The pros and cons. What's the pros of this one? Well, I think it is the simple and the easiest conversation. It's the simplest, the easiest conversation when it comes to buying and owning some assets. The idea that you buy something that you like, that has got some features and some locations that we all believe that if we were living in that area, we would want. Like I'm a big fan of the idea that you don't buy something just based on the numbers. That's rubbish, complete rubbish. The numbers are important for sure, but Sam says this all the time. Where's the third space? Where's the extra amenities? Where's the livability? Where's the mobility of this property in the area? Because that's where the real wealth is, folks, especially medium to long term. Buy and hold, the simplest, the easiest. It's lending is simple. Lending is simple, folks. Lending is simple. It depends on how you own it. Tax deductions are pretty straightforward. Capital growth, cash flow, that takes time. Now, the cons on this one, folks. What are the cons? Chuck it in the chat if you want to. Well, this one, the cons, it takes time. It takes time, folks. It does. Doesn't take 1 or 2 years or 3 years or 5 years. You've done something amazing. Sometimes the timing of the market, your timing, just because you started when things were going your way, you might imagine you got your portfolio, you started your portfolio, 3 years ago at the start of COVID. Your values went up. Happy days. Yeah, dead right, Alison. Third space. You got to have something outside of the property, especially if it's apartment living. Where's that third space? Where's that accessibility? So time is an issue. Time. People who are not patient, it's a con. Sometimes cash flow is an issue. Sometimes it can be negative cash flow, folks. Buy and hold. It's a balancing act, and this is where the numbers do. It does make sense to check the numbers. Check in on those numbers. Make sure it's right for you. There's a lot of people who will buy a property and don't even know what it's going to mean to their everyday income, folks. Especially after tax, you've got to know what's going on, and you've got to claim your taxes, fortnightly, weekly, whatever it is, blah, blah, blah. But, time, it's a con. I don't know. Is it a con? Is it a pro and a con? I don't think it's the right way. But anyway, sometimes it can take longer. Time is longer to dollars, longer to money. Cash flow sometimes is an issue. Okay, as we go, patience is probably the key here. But buy and hold, I'm a massive fan of buy and hold. Most of us, folks, should just master the buy and hold. Listen, if I was to analyze, I've got 10,000 clients over the last 22 years across Australia and New Zealand. If I grabbed all of their portfolios, I would say with a high level of likelihood, 99% of them have made all of their wealth by buying and holding a good piece of real estate. So I'm telling you, folks, it's the simple one, but it takes time. All right. Who wants to speed it up? Like if you're, can we do some type of purchasing and doing something to the property. Let's look at the next one. So buy it, eventually hold it, but what do we do in the middle? What do you guys think here? Yeah, that's right, Marcus. Yep. Takes time, bit of maintenance. Yep. Tom, you're right. There's maintenance involved, and sometimes the debt's high. You're dead right. Okay, so this other one. So you got maintenance, the debt is high, and it takes time, right? Okay. What do you think the next one is? This next layer, it can and it can happen faster. This next layer often. And what makes the value of this thing go up? Well, it's market forces. Okay, market forces. Yeah. We're not in charge of those market forces, are we? Once we've purchased the property, and that's probably a con. And that's probably a function of time. The buy and hold, just simple, buy it and keep it. The market has to do its thing, and the market does up and downs, and we over time, it's a trajectory which is upwards, but sometimes it goes up and down. All right, now let's have a look at the next layer, the next type of deal. Buy, do something, and hold. What do you think that is, folks? Chuck that one in there. Yep, renovations, absolutely. So add some value, folks. Add some value. Now, 100%, Tom's right. You can renovate. You can reno. You can, add a granny flat. You could, what else could you do in there? You could furnish, et cetera, et cetera. That's probably a small add value. Subdivision. Yep. There's a subdivision there for sure. So subdivide and maybe build another dwelling. All of those sorts of things. So this one, nothing wrong with this one at all. I think it's fabulous. You buy something, add some value, and that can accelerate its value. It can accelerate unlocking the money that you put in, folks, because if you put cash into a deal, you want that cash back. Now, ultimately, and this is what a lot of investors, we've got someone all the way from Slayford. Is that how you say it? Sleaford. Good morning, all the way from SA. Great to have you on the coffee chats this morning. If you put money into a deal, folks, if you put 100K into a deal, once that 100K has been returned to you, now, this is what a lot of people don't realize. Once the property has grown in value significantly enough to give you the $100,000 back, and you have no money in the deal, folks, there's not one red cent in that property and you still own it, what's your return on investment? Tell me in the chat, folks. If you have $0 in and you are getting a return, rent, tax deductions, capital growth, if you're getting a return, you got zero in and you're getting a return, what's your return on? Do the calculation. Tell me the number, folks. 100%. I think, well, once you've got the cash back, that's 100% return on your cash, Luke, for sure. And then from that point onwards, now you might need to check my math on it, folks. But once you've got your money back, all your money's, it's an infinite return, isn't it? Because you've got nothing in and you're getting money out. Yeah, unlimited. There you go. So the point of the property is what many of us don't realize is once we put the money in, we think, oh, it's gone. No, it's not gone. Once the property goes up in value, whatever money you put in, you take back. Now, for most of us, we'll roll it to the next deal because we're in acquisition mode. But if you buy, add value, and hold that property, unlocking that equity and rolling to the next deal or getting that money back can happen faster. All right. So a pro on this one is the time is faster. Often maybe 12, 18 months, 2 years for cycling, that a short amount of equity uplift for value. Now, you can probably push anywhere between 5 to 30% uplift depending on how much you spend, all right, and the risk you take. But we won't talk about that today. The time is quicker. That's a pro. Sometimes your rents and your values will go up, in a shorter period of time. That's the pros in this one, okay? You can force the value. You're in charge. Et cetera, et cetera, et cetera. So it happens faster. What's the con of this one? Well, folks, the risk is increased in things like, overspending, construction issues, like it might take longer. Like, it might be a cash flow issue. You're trying to renovate, you uncover something like, oh shit, I was only going to spend 30 grand on that. Now I got to spend 50 grand or 70 grand. Construction overruns. Now this is kind of project management, folks. Management. Okay. And it's not for the faint-hearted. Let me tell you, if you're just, brand new to property investing and you're like, oh yeah, no worries, I'll just do a reno. And it's more than just a simple reno, which is like painting carpets and, some bloody light switches, folks. Then don't take this too lightly. I'm telling you, because I've seen so many disasters happen where, people have watched, Grand Designs. What's the reno? Watch the block. And they're like, yeah, no worries, I can do it. Yeah. Anyway, listen, if you've got a full-time job, you got children, you got a partnership, a partner, life, marriage, whatever it is, and you got children and a hobby, I'm telling you, taking on renovations and construction jobs as you, I can give that a miss. Anyway, get someone else to do it if you've got the project's worth it. Just buy something you don't have to muck around with. I like that one. Most of my clients buy stuff that's new, all done and dusted. Happy days. Right. The buy and hold, add value. Awesome strategy. I love it if you're good at that stuff. And what's the last strategy? Buy something and something. Data trading, not a bad idea, Alison. Not a bad idea. There you go. So buy it and then do what, folks? What do you think that last one at the top is? This is the creme de la creme. This is where the big dogs play. This is the big end of town. What do you reckon that is? And I mean, listen, we can all do it too. But it just depends. What do you think? Yep, development. Exactly, Marcus. Yep. Buy, develop, and sell. Yep, perfect. Luke, development, subdivisions, yeah, for sure. You could, buy something and turn it into a duplex. That's a small one. But the interesting thing here is the sell part, folks. Okay. So what are the pros? Well, you can make some damn fine coin, folks. This is great cash flow, right? If you can do it. Okay. You can increase your cash reserves quite quickly. And, happy days. Sometimes, this is what I do now. I buy, develop, sell most of them and keep one, right? That's what I do now. And then I'm a bit obsessed with buying other properties that are really good all the time too. So I think I need to go to Properties Anonymous. But cash flow, great cash flow. That's a pro. You can get things rolling. What is the con on it? What's the problem? Well, it's a much higher level of risk, folks. Much higher level of risk. Yep, everyone wants to be a developer. Exactly, Tom. Yeah, listen, well, I tell you what, over the 20 years, yep, exactly. Risk is high, folks. Risk is high. You've got to put a lot of cash in. Lending. Lending is expensive, costs a lot of money. Okay. Yeah, Luke, absolutely. If you can get a piece of the pie with some other stuff, and that's part of what part of learning over the years is that you can get involved with some of these things with some cash and not be the developer, and get a good return along the way too. So there you go. Lending a lot of dollars, and there's a whole level of skill in this. You really got to project manage, et cetera, et cetera. So, and sometimes the time can blow up. We had a couple of deals in COVID, and one still going now, was meant to finish in sort of 18 months, and it's been 3 years. Got caught up in COVID, got caught up in council issues, all those sorts of things. That's the risk, folks. That's what happens with these things. However, is it worth it? Yeah, you can get great chunks of cash and turn it into cash flow. Okay. Yep, there you go. Yeah, you're right. I think you're right, Alison. Positive is Properties Anonymous. All right. So there you go. Does that make sense? The simple, straightforward stuff. Buy and hold. Buy, add some value, and hold it. Buy, add some value, probably, and sell it. Like you could talk it that way too. For you, where are you at? What's your version of the world? Most of us start out in the buy and hold world, and we may graduate or push into the buy, add value, or the buy, develop, sell at some point in the future. Yep. Either do it ourselves, or like Luke said, get involved in some of the joint ventures and someone else does it, and you get a bit of a return based on your cash involved in the deal, which is good too. But anyway, there you go, folks. That's it for today. Wealth Coffee Chat done and dusted. There you go. Now listen, tomorrow, what is the date tomorrow? I'm down in Melbourne tomorrow, and I don't think I'll be able to do Wealth Coffee Chats Thursday and Friday. I'll tell you why. I'm commentating the Olympic qualifying climbing competitions in Melbourne for the Australian Olympic positions. So there you go. Don't know if anyone knows that, but I do a bit of commentating and live streaming climbing competitions around Australia on the side, just for fun. But I'm away, and you might be able to catch it on KO, Australian Sports Climbing YouTube, and on the IFSC, International Federation of Sports Climbing. There you go. Anyway, so I'll have a few days off. I'll have a couple of days off, folks. So there you go. Yeah, exactly. I want to be involved in the Olympics at Brisbane. That's my goal, Alison. There you go. All right, folks. Well, that's it. I'm done. But a couple of days off, and I'll see you Monday next week for another Wealth Coffee Chat. You guys take care. Great to see you. Bye for now. Welcome to another Wealth Coffee Chat. Marvellous Monday. Hope you're well, folks, wherever you are. If you think it's Get Rich Quick, you're in the wrong place. This is the wrong podcast. This is the wrong life for you. Welcome to another Wealth Coffee Chat. Hope you're all awesome and well.